Hello, people. Welcome to the community of the Growth Mindset podcast. Guys, if you are a first time listener, don't forget to subscribe on whichever platform you're listening from so that you don't miss on more interesting episodes coming up in following weeks. And for our daily listeners, here we are again with a new episode where we will interview another interesting personality from a unique industry and understand how they were able to accomplish this great level of success. Remember, this is a podcast where we learn easy, practical methods and tips that we can implement in our daily lives from the very best and the most successful people known today. Because as we all know, success leaves clues. And we, the people having the growth mindset, will use these clues to create a better, more fulfilling, and a successful life. So, let the growth begin. Vivek, thank you for joining us on the Growth Mindset podcast. It's a pleasure to have you here.
Pleasure mine. Thank you.
Vivek, for my listeners who may not have come across your work at the moment, I know you're very well known in the financial space, but let's say for people who are hearing to you for the first time, because these are young people, would you just like to tell a little bit about yourself and your background?
So I've been sleeping, eating, hugging everything stock market for so many years. I just love stock market. I think purely because of the fact that it's inside my blood, and I've been working on stock markets since I completed my MBA in 2005 from IIM Indore. And since then, I have tried to learn the art and science behind stock market, and I've been making money from stock market. I don't say that I make money because of my skill. I always say that I make money because market wants me to make money. So I've been very blessed that I have learned the art of making money from the market. And apart from that, I have a large team of 150 traders based out of Calcutta. So we all together work hard from morning 8 o'clock to evening 11 p.m. to figure out how to make money from the market. So that's our core. Apart from that, for the last 6 years, I've been passionately involved in giving back to society, teach people in large. So I run two products parallelly called elearnmarkets, which is the largest financial education portal in India right now with almost 7 lakh learners. And Stockage, which is, people call it Bloomberg for retail investor, that has almost 2 million downloads, and a lot of people love it for its simplicity and for its effective uses. So all in all, a stock market guy who has been in market and fortunate to be surviving this market all the time.
True. So what exactly is stock markets? Like how does this work in the first place?
Well, stock market is just like any other marketplace where if you go to the marketplace, you see buyers and the sellers. And stock market is exactly the place where you see buyer of stock and sellers of stock. So buyers of stocks will be typically people who have a lot of money and they want to park their money in some productive asset. So stock becomes that productive asset. And the seller of stock will be the companies or the entrepreneurs who want to grow, who want to scale up their business. They will offer these stocks to these investors, and these investors will invest in those stocks. So pretty much a very simple concept, that people who want to buy capital and people who want to sell capital. Stock market is just one component of financial market. The financial market ecosystem is very large, which has banking, which has insurance,
Correct.
AMC, mutual funds, etc. Stock market is one of the product or a platform where people buy only stocks.
Got it. And how can people get started with stock market? Like, what are some basic things to keep in mind, and what's the process like?
Well, if you want to start stock market, the most important thing is to believe that you can learn stock market. There's a very, very strong misconception among people that stock market is very complicated.
Yeah.
And we have been told in our family also. So if you see a traditional middle class to upper middle class family, always parents have been telling us that stock market, don't go stock market.
True.
It's speculators then, it's very complicated. But I think India has matured from that immaturity of our parents, and we have grown to realize that it's not very complicated. If 50% of US population has invested in stocks there, we can't have only 3% of India's population invested in stocks here.
True.
So there's a major disconnect, and that's the reason why the overall business environment has not grown in India, because we are largely dependent on loans from banks. And equity becomes such an important part of source of capital for an entrepreneur. So when you have to start, it's very, very simple. First, you have to believe that you can learn it. Second, there are processes to learn it. Just like if you want to become a doctor, you need to undergo education. You want to become a lawyer, you need to. So stock market also, there are enough education, product, portfolio, courses, modules, which you can subscribe to. And fortunately, we are living in an era of social penetration where all of us have been getting a lot of content online free. So, for example, elearnmarkets has almost 5 lakh YouTube subscribers, and we develop a lot of content there free. Or my personal YouTube channel, today we just reached 1 lakh subscribers there. So there you see a lot of free content. So first learn, believe in yourself, and then learn. And once you do that, opening an account with any stock broker and plugging in yourself with the exchange and starting the process, it is pretty simple. Because technology has simplified things so much, it has democratized things so much. There are enough people in the market to tell you, open an account with me, open an account with me. Correct. So that's like the third stage, where if you really want that, yes, this is something which I want to do now, open an account with a broker and start with a small capital. You can start with as small as 5,000 rupees. Consider it to be a learning cost. 5,000 rupees is nothing. We just go outside for dining for a week. We can easily spend that 5,000 bucks. But imagine how powerful this 5,000 could be if you actually get into the groove of learning finance and financial market. And eventually, you get the confidence of deploying more capital. And you can't believe what kind of wealth you can create if you do it the right way, obviously.
Got it. And talking about buying stocks, now there are, first option you said, we can reach out to a broker, but is a broker also required, or people can themselves go ahead and start their own account and start investing?
So we have to understand stock market is offered by stock exchanges, which are regulated by Security and Exchange Board of India, SEBI. And only stock exchanges can offer you stocks, listed stocks. Okay. So if you want to connect with those stock exchanges, you can't directly connect with stock exchanges. So stock exchanges like National Stock Exchange and Bombay Stock Exchange, they have appointed brokers. And you necessarily have to open an account with a broker to connect with those exchanges. Okay. Although all your trades which you initiate with a broker eventually will go to a single server of the exchanges, because trade matching should happen. So if you want to buy, you will put a bid there. Correct. If someone wants to sell, the person will sell and ask there. So that will happen in the exchange trading engine. But ultimately, the access to that trading engine has to be done by the broker.
Okay, got it. And based on your own personal experience in the stock market industry, what do you think is more better? Having short term, like buying and selling of stocks, which I see happens on a good scale as well, or keeping those stocks for a longer run so that you can invest more, you can expect more returns?
There is no clear answer to this question, very honestly, because it's so personal. People who want that short-term excitement, it's like difference between T20 match and one-day match. Forget about test match. Now I'm not talking about test match because it's very boring. So, holding on to a stock for 5 years, 10 years is like test match, which no one wants to play these days. But still, playing T20 versus one-day cricket is your prerogative. If you have to ask me, when I was in my early 20s, I was young, I was excited, and I want to do a lot of things. So trading became a very obvious choice that let's try. It was more of a adventure when you want to do things all the time. But as you gain maturity, as you develop that thought process that trading all the time doesn't mean that you make money. You will make your broker wealthy, but probably you will not make so much money. So as I gain maturity, and now I'm in my early 40s, so I understand that less trade is actually more effective. So I moved to that zone of limited trades, probably trade 5 times or 6 times in a month. Earlier I used to do 5 times or 6 times in a day.
Wow.
Yeah. So okay. There's no, and I would say that if I tell you also that Irshad, please don't trade every day, you will say that no, I want to trade every day because I want to get the feel of the market.
Personally, yeah.
Yeah. So yeah, you can start with that, but eventually I know for sure that even you will come back to where I am, that you will trade very limited, but trade only when the probability of success of a trade is high.
Yeah. And exactly that's what I wanted to understand now. What do you think can increase the probability of our success rate? How should we trade? What should be the frequency like? What kind of stocks people should focus on?
There are, so one is the hard skill aspect of market and there is a soft skill. Hard skill is basically all the techniques which is involved in the market. Techniques like fundamental research or technical price based graph study, etc. These are techniques which are more hard skills. Soft skills is more temperament,
Hmm.
where which comes within. Okay, and it doesn't come naturally, and unfortunately there is no one medicine which has been developed which will give it to you and your temperament will come immediately.
Correct.
It comes with over a period of time with experience.
Hmm.
So I always suggest that trading limited is a function of how much temperament you have, how much patience you have. Because in a market, you always get lured to trade a lot because
Hmm.
the structure of the market is such that the color is blinking. So many stocks coming, everybody is talking about stock from every corner of the society. So you
Mm-hmm.
get tempted to trade. When you have very strong temperament, you actually reject the temptation and only trade when your mind says that yes, this is the only time I should trade.
Hmm.
So it takes time to build that. Very honestly, it's not
Okay.
a very straightforward answer that today you start and you will develop a fantastic temperament. I built that over a period of time with my experience in market. Then I also adopted a lot of soft skill aspects inside me, like meditation and looking at broader things in life, not just looking at market all the time. That has given me a more holistic understanding of the market rather than just being a market practitioner.
Nice. I like this answer because yeah, it gives a lot of sense, right? Because you just said it's not just about stock markets as well, but also taking a holistic view of your life, because your life is more than that, right? Because you want to make sure that you are constantly stable, because you don't want to get too lost in stock market, then you may end up falling short in some areas of your life. But yeah,
Yeah,
also making sure that you do the right thing at the right time and build that patience so that you can invest that for a longer run.
yeah.
So one question I have around the same stock market industry is, what has your observation been, Vivek, regarding what kind of industries are people going and buying more stocks? And where do you think maybe 10 years or 15 years or 5 years down the lane, we can expect more results out of that specific industry? Could be healthcare, could be IT, software. What do you think?
See, there is a concept of sector rotation in stock market, which is very, very important concept, which says
Hmm.
that at any stage of business cycle, a particular industry is relevant. And as you change the stage of the business cycle, so business will always move in this cycle, right?
Hmm.
And not all industries will be relevant at each stage of the business cycle. Right now, we are at a stage where businesses are showing recovery after
Hmm.
COVID, and there
Correct.
could be a very strong growth in coming few years because of the base effect that the growth has kind of flattened this year. So recovery is typically led by more cyclical sectors like commodities, like bank, NBFC, etc. So divide these sectors into three categories. One is the growth sector, second is the value sector, and third is the cyclical sector. So growth sector is predominantly growth, like, say, example, consumption oriented sectors like the FMCG, where our country is supposed to grow very fast because we are younger population. So FMCG and other consumption driven sectors will also grow much faster than any other
Hmm.
industry. Second, the value sector is typically belongs to sectors where there are hidden values, and the value probably will get unlocked in future. Example, say telecommunication. Uh, so both the large telecom players, they have hidden values. Value is the database of subscribers, the
Hmm.
user behavior, etc., etc. That probably they will unlock in future. And the third is the cyclical, which is dependent on the business cycles, which is again in turn dependent upon the interest rate cycle. So if interest rates are low, you'll see more demand for housing, more demand for car, more demand for all these things. So banks will also witness a lot of growth because interest rates are low and people are demanding a lot. So to be very honest with you, at this stage, lot of money is getting into tech because last 12 months we have kind of believe that everything will be around tech, everything, right? And COVID has actually uh, increased the pace of adaptation. You talk about edtech or talk about adaptation of these meetings, etc. So technology has played a very important role. So tech, pharma, yes, at this moment, yes, but post COVID, I don't know how much pharma will continue the momentum. I think people will overall start getting more fitter, and probably pharma may lose the shine in near future. I don't know, but at this stage, pharma is definitely quite heated. Real estate, very interesting development is happening there, that commercial properties rates are going down because now people are willing to leave their office space or reduce the office
Yes.
space and allow work from home for a longer period of time. But residential demand has gone up because everyone want more space in their house. They need a library space, etc. Gone those days that you have one living room where you're going to eat, your family is going to study, your kids are going to study, and you're going to do the office work. Now people need space. So residential property has gone up. And FMCG or consumption stocks anyways are doing phenomenally. But I think two sectors which will be a dark horse. One will be infrastructure. I
Hmm.
think now government will push a lot of money into infrastructure because that instigates economic activity very fast. So companies like Larsen and Toubro or real estate infrastructure companies should do ideally good. And the
Yes.
second one is the public sector undertakings.
Hmm.
I think this government is quite headbound in making sure that PSUs should give them value. Otherwise, this investment targets will not be met. So, like for example, LIC IPO is expected by year end, and a lot of good companies, public sector undertakings, will see good IPOs. And the ones which have not performed probably could perform. There is always a risk factor in public sector undertakings that it may not perform, but it's worth looking into
Hmm.
good quality public sector undertaking. So infra and PSU is something which you can look at and build portfolio around it.
And now let's talk about people, right? Young folks, let's say, or entrepreneurs who maybe started or who are in their late 20s, 25, 28, 29, 30s. How can they start saving money as well as also start investing? Because investing will only come in once you start saving money, right? So do you have any tips, Vivek, that could help young folks kind of or strategize anything with regards to money and how they should start investing?
So I'll give a life hack
Mm-hmm.
because invest saving has to be a very forced activity these days. But we all get so lured with consumption that saving has become the net balancing factor. So income minus consumption is saving. Ideally, it should be income minus saving should be consumption. But
Hmm.
the world has changed and we have become so consumption oriented. So the only way to push saving inside us now is to save equivalent to consumption. Uh, and you only consume with an intention that you will have to save that much which you are consuming. One of the thing I have been doing for long is if I am consuming certain product which is manufactured by a certain listed company, what I typically do is the value of the consumption which I have done of that product multiplied by 10. What I can do 10 because obviously my consumption is small and my income is large. So
Yes.
I can do 10 times of that. But if everyone has to find out their factor. What should it be? Could be one also for a few people. Invest that in that company which has manufactured that product. Because you are anyways consumer of that company product, right? And you know
Interesting.
the product and you understand the company. For example, say if someone is smoker and the person is smoking ITC, right? So a cigarette is worth what, 10 rupees, and if you are smoking say 200 cigarettes or 500 cigarettes a month, so 500 into 10, you spend 5,000 rupees a month. Buy 5,000 rupees month equivalent of ITC stock also, no?
Nice.
At least there will be an opportunity for you to recover that cost if stock price goes up.
True, and that's a very valid point as well. I mean, this is so interesting because I'm just thinking about what are the products we use, and you investing also gives you a personalized effect, saying, "Yeah, now I'm also using this, and I'm also invested in that." And public companies are the only companies that we can buy stocks at. Is that correct, or are there any other ways as well?
In India, yes, it is largely available for public in large are the public listed companies. You can buy some unlisted large companies, but there are certain brokers who offer that. There are unlisted entities, unlisted brokers who offer those unlisted entities. For example, if you want to buy Paytm, you can buy the stocks. So typically ESOP pool comes into the market and people sell. But I'm not very confident about those because you really don't know how the transaction happens.
Correct.
Whereas in exchange, you know that there is a clearing corporation and everything is in black and white. But there is a gray area in the unlisted space, so I will never recommend you to go there. So I think listed, there are so many companies, yes. 6,000 companies are listed in India. Effectively, out of those 6,000, 2,000 are worth looking at. Forget about those 4,000 which are not traded or not very active or there are some problems with them. Out of 2,000, all you need to do is figure out 20 stocks here.
Correct. And
not a big deal.
And what about buying stocks or let's say buying stocks for some other companies that are outside India? Do you think we should have that portfolio of mix?
Well, these days, a lot of people are trying to do that by investing their money in US stocks. And there is a massive craze of buying US companies for obvious reasons, because last 2 years, US stocks have done phenomenally well, especially the tech giants in US like Facebooks and Googles of the world. But, my humble submission is that it's better to invest in US stock-based ETF rather than directly owning those stocks. So in the concept of mutual fund, there is a concept called ETF, exchange traded funds, which is a global concept. And ETF is far bigger outside than in India. India is just picking up very well. So there is a ETF by this company called Motilal Oswal. The ETF name is Nasdaq 100. And they invest in top 100 Nasdaq companies of US. So if you believe in US economy, that they are the drivers and they will be dominating for a couple of more years, and if you want to allocate a small capital for US stocks, then probably buy some amount of ETF of Nasdaq 100. Or there are mutual funds who invest certain percentage of their investments in US stocks. For example, there is a fund I know and I've invested there also. It's a Parag Parekh Flexible Flexi Scheme, where their investment is 25 to 30% of the overall corpus. They have invested in US stocks, which is in Alphabet, Amazon, and 3-4 more companies. So rather than you making that direct investment, why don't you start SIP in those mutual funds where you get exposure to Indian market as well as the global markets?
Interesting. And how can these normal people who wanna invest in these reach out? You said Motilal Oswal is one, and then the other one as well. So what's the process like? Is there a mobile application? Do people have to? What's the process there?
So there are all the brokers are offering mutual funds, and there are so many platforms now, ranging from direct Motilal Oswal platform also is available if anyone wants to buy or open an account with broker like Kotak Securities who offer, or you go to your bank, whoever your banker is, and ask them that I want to open an account and invest in all these assets. They are pretty much happily available to help you in this exercise. And there are a lot of fintech giants like Paytm Money, Grow, hyper-funded startups also, they are offering these products. So as I said, transaction platform is quite commoditized. You just have to shout out in Google and you'll suddenly see a lot of advertisements.
That's true.
Bouncing on your head.
That's true. Yeah. All right. And what are some mistakes, Vivek, that you see people making in this stock market industry? What can we do to avoid that as well?
I think the biggest mistake I see people doing is by leveraging. If they have 50,000 rupees, say for example, they borrow more money. So they will top up that 50,000 by 1 lakh, 2 lakh, by either borrowing from other people or taking personal loan or credit card withdrawal, and that outstanding balance keeps on accumulating and they lose that money, and finally they have 2 lakh, 3 lakh, 4 lakh debt. So rather than saving from existing income and putting that saving into market, they actually over leverage and use that capital to trade the market. So, I get almost on daily basis, I get one distress call of someone who really is in a bad shape because of his mistake of using leverage to trade the market. So first thing first is to stop doing that. वो कहावत है ना हिंदी में कि जितनी चादर उतना ही पाँव फैलाना चाहिए.
True.
If you don't have capital, why do you need to leverage? At least initial phase, one should not leverage. Maybe after 2 years, 3 years of market engagement, when you understand the nuances better, then probably you can think of leveraging. The other thing is I clearly see that people have blind faith on experts. In India, there is always this saying that when we in school, when we used to study a lot and when we used to appear for the exam, but if the topper sits in front of us and his paper is visible, then we used to close our mind. What's the
True.
point of putting our mind when the topper paper is visible to us? इंडिया में प्रॉब्लम यही है कि everyone is so looking for experts, so looking for gurus, so looking for someone who will tell him or her what to do. I think that culture has to move out, where people have to take it in their hand that, okay, I'll listen to everyone. No problem listening to people, but then I will only do what I believe as per my formula is correct. Otherwise, I'll not do it.
Correct. I love this answer because everybody's background is unique. Everybody thinks uniquely, right? The kind of circumstances I may have, the kind of environment I may live in, the kind of money I may make is totally different from what you are making right now. Making those right conscious choices is the key to basically, for you it may take 1 year, for me it may take 10 years, but at least we are sure that we're going to get there at the end of the day, rather than me trying to match up with the Jonases and thinking, okay, just because he's doing, let me also invest it in the same way, as you said, and then getting into debt, taking loans, borrowing money. And I also want to focus some more light on this part, because let's say somebody who is already in debt at the moment, maybe loans or credit cards, what is the good process? Should they start saving and then at the same time invest, or should they first clear their debts and then get into stock market?
So, logically, if you make your balance sheet and if you have debt, net debt, you have zero savings, no? And you can't invest with zero saving or negative saving.
Oh, exactly.
So everyone should have a balance sheet, right? Like a company makes a balance sheet. What are my assets? What are my current liabilities? And what are my contingent liability, which will come in future? And it could be any liability. It could be medical provisions for your parents. It could be study provisions for your kids. It could be marriage provision for yourself or a holiday provision. These are all contingent liability in your life. You have to account for that also. Plus, there could be immediate need. And COVID has taught us that any point of time, anyone of any age can need some capital to protect his health. So maybe 5-6 months of your salary should be part of your contingent pool, which you can't touch. After all these things, if there is some money left, that's what saving will lead to investment. Otherwise, there is no point of doing investment.
Interesting. And in your own personal space, now you're leading a team, you're also getting into social media space. But then how did you get this mindset in the first place of, okay, stock market is the thing, I'm going to make it big in here? Did your parents support you at all times? How was all that? Your own personal story.
So Irshad, I would say that I've been lucky because I'm born in a family where stock market has been forever. My grandfather was in market. My father is still in market. He's 74. So it became very natural choice for me. Although my father never wanted me to be here, as the case with most of the fathers, that they want their son to be in a proper job and doing a better job and not becoming part of this entrepreneurial journey of stock market. No one likes that these days. At least not 15 years ago. Now, obviously,
definitely,
our parents are promoting entrepreneurship because of social media. So I was lucky that I was born in this family which had exposure. But then I had to build things from there on. And stock market it's actually quite a nice place. Trust me. I developed that passion inside me, and once you have organization around you and more people who are supporting you in your endeavors, then it becomes a snowball effect and your passion keeps on magnifying.
And if you had to recommend, let's say, 1 or 2 books that could help people in the stock market space, which you think are your personal favorite, what those 1 or 2 books gonna be?
So there is one book which every retail investor of India should read. It's called Bull, Bear and Other Beast. Okay, it's by Santosh Nair. he is the one of the founders of Money Control, which incidentally is also competitor of Stock Edge. But I love Money. I love that book. That's why I keep on advising people to read that book. It's called Bull, Bear and Other Beast. You will get to understand what really happens behind the door in stock market. The whole story of Harshad Mehta, the whole story of operator-driven market and what actually works in the market, you should know before you get into the market.
Exactly.
So that is one book which is there. The other book which globally everyone reads when someone comes into the market is Intelligent Investor by Benjamin Graham. That is like a Bible of stock market when you start investing. And there are many more books. Coffee Can Investing by Saurabh Mukherjee. So what we have done is, we have done very nice thing. Rather than people reading full book, which has become kind of difficult exercise these days, we have started creating lengthy book summaries of these important books. So if someone goes to elearnmarkets.com/school, that link will take to various modules which we have designed, free modules. One of the module is book summary. So we have given book summary of around 10 to 12 books, and we're still developing more such book summaries. Even if someone goes through the book summary, the essence of the book will definitely get captured.
Okay. And you understand the importance also, right? Like moving out a little from the stock market industry and getting into our own mindset and understanding what ticks us, right? You understand the importance of having the growth mindset, which is always like learning, growing. So what advice would you give to all the listeners who are listening to us right now? How can they develop the growth mindset first? And second, how do you develop it?
So I'll give you a background about how I have grown and what led to that growth. If at all I can call myself, I've grown a bit. After my chartered accountancy, I was an accountant and I learned accountancy. But I joined, in 2002, I joined JM Financial's mutual fund as a sales executive. So as a chartered accountant, doing sales of mutual fund was quite a thing which a lot of people were asking that, what are you doing?
Exactly.
And I said that, boss, if I have to do anything with my career, first thing first I have to learn is sales, no matter what my education qualification was, right? So this is like thinking beyond what an obvious route could be. And then after that, I started trading because I thought that trading will definitely excite me, and it did. But then in the middle of the trading journey from 2002 to 2003, I realized I was making money, but I realized that I'm not someone who will only do trading. I don't like that setup of having trading screen in front of me and I'm trading and making money for myself. I'm more of an entrepreneur who want to build businesses, build products. So I thought, let's do an MBA to learn this whole skill. So fortunately I got through IIM Indore in 2003 to 2005. And after that, I got a job opportunity to work in JP Morgan as an analyst. But I rejected that. I didn't go. I joined JM Financial at half of the salary as a commodities analyst. And in 2005, no one was joining commodities. People used to call me idiot that what an IIM graduate is doing in commodities market. There's no need. Equity is far bigger than commodities. But I always knew that a new market always gives you much better opportunity, much better wings to fly. Because very few people are there, and if you can make a mark in that market early on, then you will be recognized very fast. So I was lucky again that I did that, and I mean I've been continuously doing that. Then I went to technology, I learned technology, social media. I'm developing content for the last 2 years, and I'm actually quite surprised with myself that I was such an introvert person. And today I'm talking to you, or I'm recording videos in front of camera, which is quite a revelation for me. So my humble submission is that people should become proactive and always challenge their ability. We always have this habit of getting into comfort zone very fast. And I am a very restless chap. I always challenge myself that now I'm challenging myself to learn machine learning, artificial intelligence, because I see I'm getting strong competition from 24, 25-year-old chaps who are fantastic in these technologies, and I'm feeling handicapped. So I'm learning them, because if I don't learn them, I will not be able to manage them. They can just talk about anything and move away, but if I've learned it, at least I can tell them that nobody, you're making a mistake. This is how you have to look at.
Interesting. you spend some good amount of time in your own personal life, right? So far, any challenges that you specifically faced, which kind of gave you more revelation towards life, not just financial investment, but as a whole life?
So everyone at some point of time goes through those crisis moments where, and it's very, very obvious to have it. Some people have it early, some people have in the later part of their 30s, or some people may have it later part of the 40s. But I also went through some crisis in the middle where I was trying to figure out what is the purpose of my work. So when you
Hmm.
make some money and you become comfortable, then you start questioning yourself that what am I doing? Is this something which I'm made for? So I think that is more of a softer aspect of your life when you start thinking about it. And as a men, we always think more from the left side of the brain, no? We
Yeah.
find logic in everything, and for years in school days, college days, qualification, everything, everyone has been just teaching us to put your left side logical brain in action. Okay, why is this problem not getting solved? What's the logic? Why is this
Hmm.
case study has to be solved? What's the logic? How the market behaves? What's the logic? So we have actually not given very high importance to our right side of the brain, which is emotions.
Yeah.
So that revelation I got in 2013 that enough is enough. Something has to be done to have a balance in overall personality as well as lifestyle. So fortunately, I got connected with Sadhguru of Isha Foundation, and I did a couple of his programs. I started watching his video, and that's where the whole transition from very self-centered, revenue-oriented, logical person to more open-minded,
Hmm.
contributing-oriented person has happened, and I'm now feeling much balanced person, happier person in life.
Okay.
So everyone will go through this, I'm sure.
True.
If in your younger days you have been asked to apply a lot of logics in everything, you will have a midlife crisis very soon where you will yourself realize the importance of right side of your brain. If you can start working on it as early as possible, you will have a better life ahead.
Okay. And how, what are some practices? I understand to work on the right side of the brain, which is more like creative and emotions. Some of them are
Right.
like meditation and things of this sort. But any other tools or tips that you can recommend which you may have learned, which our listeners can incorporate?
I think what Sadhguru of Isha Foundation has given is pretty clean, and you don't have to find out other tools. Isha Foundation itself has given phenomenal tools for someone to uh, adapt one of those tools. So I would seriously recommend people to join his inner engineering program. It's a 5-day program. Now he's also doing online.
Mm-hmm.
That program itself will do the transition. You don't have to figure out what else to be done.
Interesting. And I know we are coming to the end of the interview, but there is one last question that I want to ask you. Okay. This is with regards to, let's say, you being able to do everything that you want to do with your life, right? Amazing content, contribution, stock markets, everything that you want to do, everything is done. But now it's a time for you. You are, let's say, 30, 40 years from now, you're 70, 80, 90 years old, and it's time for you to say goodbye to this world and only give two pieces of advice to your kids. What those
Okay.
two pieces of advice will be?
I would like to register this answer in my mind and actually give them at some point of time. I think the most important is, as I said, the last discussion is EQ. There's too much going inside our IQ, and the whole world is focused on building IQ. But the first thing which I want to definitely put them into, and I'm trying my best to do that, is to have them a very balanced EQ. Because without proper emotions, IQ will destroy you, damage you.
True.
And second is technology. I believe that we are in an era which is so colonization of technology that at times I feel so helpless here that I don't have a tech background. So all of us, irrespective of what your education background, you may be history graduate, you may be a computer science graduate, anyone, we have to learn technology. We have to learn the next level languages, like we have to learn Python or machine learning, and it has to become part of our lifestyle. The world is changing very fast here.
True, true. Awesome. So thank you so much, Vivek, for joining us on the podcast. But yes, one last question before I let you go. How can people reach out to you? What are some mediums they can find you?
So I am very active on Twitter. My Twitter handle is almost a lakh followers. So you can search for me at Viv Bajaj in Twitter. And my YouTube channel is also there. You can send an email to me at vivek@stockist.com. I'll make sure that I reply to most of the emails at least twice or thrice in a week. I get a lot of emails, but I love to interact with people, so I'm happy to reply if you have anything you want to understand about markets or life inside market.
Interesting. What about platforms like Instagram or Facebook? Are you there on there as well?
I'm there. Facebook is, I think, time to leave Facebook. Instagram I'm also there, so people can connect with me on Insta. Search for me at Vivek Bajaj.
Awesome, perfect. So thank you so much, Vivek, for taking your time out and joining us on the show. It was a pleasure to have you.
Thank you, Irshad.
This brings us to the end of this episode, and hope you at least had one takeaway from this interview. If you have any questions or want to talk to me personally, you can find me at www.silawathirshad.com. See you soon.